The regulatory scene in 2026 will be quite interesting in the world. This is because a lot of countries are prepping new regulations to be implemented specifically on taxes. If you are curious on the development and how this will impact the crypto market, well, stay tuned. Hey guys, welcome back to the Republic Labs YouTube channel. In this video, we will be talking about a couple of countries that is currently developing some regulations regarding crypto tax. Specifically, countries that are leading the adoption of crypto and has a big impact on the market. Let's start with the United States. So currently, the US lawmakers are prepping a new regulation called the Parity Act. So essentially what this does is that the Parity Act will change how crypto is taxed in the United States. Currently, crypto is taxed similar to properties or houses. This is because capital gains are taxed, but capital losses can be used as tax deduction. Also, after investors and traders sell their crypto for tax deduction, they can immediately buy the crypto again, essentially looking for another profit. However, with this Parity Act, it leaves less advantages for traders or investors, specifically short-term investors. Contrary to popular beliefs, this regulation is not implemented to limit traders or investors. Rather, it is implemented to normalize every asset in the United States to be treated equally. So the Parity Act suggests that crypto should be treated and taxed similar to stocks, essentially taxing capital gains and also capital losses. However, the changes is in the buyback of the crypto itself. In the current regulation, traders can sell their crypto for tax deduction and then buy it again immediately. However, with this new regulation, the trader or investor need to wait 10 days. However, the set days is not set yet, so there might be changes. But this limits the transaction volume that can exist because of high volatility trading. So essentially, this limits the trader's opportunity to find new profit. However, this does not limit the trader itself for trading over and over again. But in terms of tax deduction, they will only be limited to a set amount of period before having to do it again. This might translate into less transactions in the crypto market from the United States. However, the positive side is that this might prompt more holders. Speaking of tax itself in the United States, more holders means less taxes. However, the US might not mind that because they're also creating a new crypto tax safe harbor bill, essentially getting people to use stablecoins rather than crypto, which they can do by creating this new bill that limits the tax on stablecoins. So this means some stablecoins will not get taxed. It is clear that the United States is heading into more Web3 and blockchain adoption rather than crypto adoption support. So this means there might be more holders and more DeFi activity using stablecoins. Overall, this might prompt new adoption in the United States. However, the focus is currently in stablecoins. This is in continuation to the Genius Act, which makes sense. So, this means that in the long run, crypto will adopt the technology but not the volatility itself. This is also similar to the UK or the United Kingdom. As you can see here, the UK is currently prepping a new regulation called the No Gain No Loss DeFi Tax Plan. So the current regulation harms DeFi investors because by only depositing or withdrawing from a DeFi protocol, they will get taxed. However, with this new regulation, it is planned that DeFi investors can only be taxed after really transacting. So no deposit or withdrawals or transfers will be taxed. This got a lot of praise from some investors and CEOs in the crypto market, one of which is Aave's CEO. As you can see here, Sonny, the CEO of Aave, one of the most popular DeFi protocols in the crypto market, praised this new plan, stating that it will push more DeFi adoption in the UK. So this news is quite positive. However, regarding tax itself, some countries might not be as lucky, as Japan is currently tightening its tax regulation and crypto regulation overall, which is quite a shame because Japan is usually in the forefront of crypto innovation. Currently, a lot of investors in Japan, specifically 22.2% of investors that left the crypto market, stated that they left because of the tax regulation that is quite complex. So this means that it might continue to 2026, leaving less adoption in Japan in the long term. This is because the tax is quite heavy, and this might take a toll on investors and traders' profit. Similarly, in Canada, the same thing is currently happening, with Canada cracking down on tax itself. Currently, 40% of Canadian crypto users are flagged for tax evasion. If you don't know how to avoid taxes, there are two ways. The first one is tax avoidance, which is legal, and then the second one is tax evasion, which is illegal. So this is why the Canadian government is cracking down on crypto regulation, specifically its taxes. So, this might take a toll on crypto adoption in 2026, considering that Japan and Canada itself has huge volumes in the crypto market. Also, the EU is cracking down on crypto regulation and taxes, because a lot of countries in the EU is currently adopting the MiCA regulation, or Markets and Crypto Assets regulation. This regulation is set to consider crypto as a regulated asset. So, a lot of countries are implementing it, and a lot of companies in the EU that focuses on crypto is registering their companies and crypto under this regulation. This means that there are more surveillance for these companies, which can hinder the adoption for the centralized maxis. More surveillance equals more taxes, because the record of these taxes are centralized, meaning it is easier to collect taxes and to crack down on crypto investors. So overall, a lot of countries in the Western regions are focusing on crypto regulation and taxes. This might take a toll in adoption in 2026, which is why you need to reconsider your strategy and your overall investing or trading plan. So overall, it seems that adoption might weaken in 2026. However, if new sentiment comes to light, then it might not matter. Because, as we learned from China, the crackdown on regulation might not hinder crypto adoption in the world. What do you guys think? Will all of these regulations hinder crypto adoption, or will it push it more because investors feel safer? Let us know in the comments below. And if you guys like content like this, don't forget to like, subscribe, and click that notification bell so you guys are notified when we next upload. Cheers, guys!